Here we go. We've got myself, Dan Ringwald, here for the Santa Barbara Real Estate Investor Association. And we have Daniel, is it Bars?
Barris.
It's
Yeah.
Barris. Okay, excellent. Thank you. And he is from Coastal Funding out of Florida.
Yeah.
And are you physically, it looks like your area code is Florida, so I'm guessing you're probably in Florida as well.
That's right. Yeah, we're based out of the Southwest Florida, Naples, Fort Myers area.
Excellent. Yeah. Excellent. Well, good, because we need a good place to invest from California.
Yeah, a lot of folks coming over here from California.
There really is.
Yeah.
California and New York. I think that you're getting a big influx of a lot of money, which is a good sign for Florida. So I love it.
Yeah. I actually imported my ex-wife and her in-laws from California, but yeah.
Good.
Thankfully, they're still here and enjoying life in Florida, but yeah.
Excellent. We've had different people that have spoken at our REIA meetings in the past that have actually lived in California and moved out a few years ago, and they got big smiles and happy they made the move.
Oh yeah, I could imagine.
So the best we can do here is vote right, and we got a chance here in a few months. We'll see what happens.
There you go.
Thank you so much for making the meeting. I really appreciate this, and look forward to going over the details here. And let me know if you want me to ask questions as we go. Save them for the end. Whatever you want to do, just give me an idea, and we'll head that direction.
Okay. Yeah, I'm happy to open. Feel free to shoot anytime on questions.
Okay, great. Excellent. Yeah. Okay. I noticed from looking over your website, you've got a really good page there for the states that you do business in and the states that you do not do business in. That makes it real quick and easy for people to go to Coastal Funding, coastal-funding.com, and you've got a lot of great information up there. So me personally, I'm looking at vacant land, so I'll probably ask a few questions as we go in regards to that. But certainly we have a lot of people that will be interested, both nationally and certainly from California. And given that we've got AI and robots hot on our heels, we need to be looking at investing, because what's going to be left, right?
That's right. Tangible assets. That's the way to go.
Well, good. Okay. Let me go through just a couple questions here for you. Commercial loans, not owner occupant. And in regards to vacant land, you've got a good page there that talks about construction, ground up construction and whatnot. And my guess is your minimum for loans on vacant land or anything on your commercial loans, what is your starting minimum amount that you will lend?
Yeah. Well, a little bit about, commercial, we do business purpose loans only.
Okay.
But specifically for residential. So like, 1 to 8 units.
Okay.
Right. Maybe we'll go a little higher, 10 units. If they're separate, of course, we'll do them separate.
Okay.
And so that's usually a fix and flip product, bridge, or ground up, right? So a lot of the builders we work with, which is quite a bit, they'll buy the land first, and then usually our product will get them like 60% on the land on the loan, and then we'll finance 100% of the construction. That's usually what most of our clients do.
Okay, so they come in with a down payment, and you'll actually fund the vacant land and then move on with the funding included in that? Or do you kind of wrap up the loan after all that and then have a loan that includes the construction and the building towards the end of that? How do you do that?
Yeah, so it's just the construction loan and land package.
Okay.
We don't lend on just land by itself.
Gotcha.
I do know somebody that does that. But in terms of, the lot and home package, we're doing, so whether they own the land outright, which a lot of our builders, like we just signed up one a couple of weeks ago, they're building out like 15 a month with us right now. And they typically just buy the land, and then once they're ready for permits, then we'll give them 60% of what they paid on the land, or what what their total cost they have into it to date. And then we'll give them 100% on construction. So that's typically how a lot of them do it. But if you don't own the land yet, we can do the purchase all in one. I've got a guy right now, he's doing one in Denver, $350,000 lot, $750 on construction. And, we're going to do it all simultaneous. So,
okay. Where would you say most of your vacant land lots are being purchased in and that you're funding?
I mean, our backyard is Florida, so we do a lot of Florida.
Okay.
Our background is, I mean, I've personally flipped thousands of properties, primarily in the state of Florida. My partner's built hundreds of properties, and we did all of this before we ever wrote a term sheet. So
okay.
We were true operators before we got in this game, which is, and the feedback with our clients is they love that, because we can offer them perspective on knowing their business. They're obviously from a consultant sort of mentor perspective. And, so we get it in a different way than somebody just kind of checking a box on a term sheet. Right.
Okay.
But mostly Florida is where we're doing a lot of them. And that's, so to answer your question on the minimum loan, it's usually we stick to like minimum all-in loan around 200,000. If they're doing some volume, we can do, much higher than that or much lower than that. So we have a guy right now doing several flips at around 120,000, but he's doing some volume. So we can work with him on that.
Makes it worth it.
Yep.
And would you say that the vacant land is typically lots in good residential areas, commercial areas? You do commercial areas too. You do commercial loans for buildings, or just strictly single family?
Strictly single family or small multifamily. That's
gotcha.
That's really our box. Now, we broker out deals on the commercial, but in terms of our money, and to give you an idea, when I say our money, there's a lot of lenders out there that say, "Oh, we're a direct lender," right? But the bottom line is they're taking it to somewhere where they don't really have their own capital.
Gotcha.
We're a balance sheet lender. I mean, we just did a closing last week in 6 hours, right? So
wow.
Somebody that direct lenders, you can ask them, hey, how soon can they do a closing? Like that's most of them won't say 6 hours, right?
It almost sounds like you've got a very small underwriter process.
Well, that one we got a call first thing in the morning. Another lender just kind of bailed on them, and it was a closing they had to close or they're going to lose it. Excuse me. And we said, look, if you can get us everything we need and stay on top of it, we'll make it happen. So it was kind of an all hands on deck, but obviously they paid a little extra fee for that, but we got it done.
You're able to do it. Now, would you say that most of those are close into residential areas, or are some of those residential vacant land more remote now that people kind of want to live a little bit farther from the city, maybe 15 minutes to 30 minutes max, but not like way out of town? How would you say that ratio is?
I mean, 15 minutes out of town is no big deal. Real remote properties, like I'm looking at one right now as an example in Nashville, and everybody loves their land in Nashville, right? They all want, 5+ acres, 10 acres. And so it's just spread out, right? So,
gotcha.
This property is probably like 30 minutes out from Nashville, and it's still rural. It's still very country feel, but, we'll do those deals as long as it's relatively close to, a primary market.
Okay. And as far as being in the city as opposed to the county, is there the majority of what you do in the city, or is the majority in county just a little bit farther out?
Most of our stuff happens to be in county. I mean, if you look at Florida, a lot of city, municipality zones or with areas are, a little smaller. So we're, typically that stuff's all built out too, right? I mean, we do
Right.
them, but usually they're tear downs, right? And then people are building something.
Gotcha. So you're really kind of a little bit more county then.
Yes.
Perfect. Okay, because I'm asking these questions. I do vacant land nationwide, and if I can work with somebody as easy as you, why not work in Florida, even though I live in California?
There
So
you go.
that's kind of why I'm digging deep here.
Okay, I get it.
Good, good. Okay. Well, that sounds good. What amounts? Okay, ground. Okay. So that really kind of covers, some of the basic questions that I have on vacant land because, there's a lot of people that want to start off really small and put some RVs or whatever, and we're talking way below 100,000. So I've got to get, a good feel for where we're going with this. And I do have joint venture partners that come in with cash to buy a property, and then we go to the next step on some of this stuff, and then eventually go to somebody who wants to maybe buy it for rental income, if there's multiple units on a 1 to say 10-acre parcel. But I'm getting a feel for what you're doing here. And mostly it sounds like you say 200,000 and up for people that really want to build a nice home on a piece of property, as opposed to getting behind the ball and chain of California and going, do I even want to do this in California? You know what I'm saying?
Mm-hmm. Yeah.
So, okay, good. So why don't you give me a little bit more of what you want to tell me instead of me asking you questions? We'll let you go.
Sure. Well, I appreciate you asking me about land because, I've done, I started in the land business. I actually grew up on a farm. So I really understand the process of cultivating land and creating and, doing all the entitlements and, creating a subdivision. And, I've taken all those kind of projects through. And so, I understand that world, especially in the small, if you want to just do a couple RVs, I get it. But yeah, this product that we're focused on, we'll fix and flips, ground up construction, bridge. Nobody's beating our pricing and our speed, right? And when it comes to kind of who we are as a team, we are kind of the SEAL team of this space, if you will.
Okay.
I say that because we're not for everyone, right? We're not for the borrower that doesn't want to put at least 10% down, or they're just, don't have the capital, just don't have the liquid, and aren't really ready for a serious investment. That's just not our borrower.
Gotcha.
But for somebody that's doing, whether it's 1 a year or 50 a year, nobody's going to beat our pricing, and it's our speed and ease, right? So our clients just say that's really the biggest feedback. It's, we had a guy, he's been doing ground up construction deals for 15 years. And he said, I've never had a company that a lender that I've worked with that was so easy. And, so that was great feedback, right? We're easy and cheap, and so it's, to some degree, it's an exciting time. For me, it's like, it's nice to be able to grandfather these deals, versus be on either side of the seller or buyer side. But we do like to take an approach of more of a consultant approach with our clients. It's like, so in other words, if you have somebody that's looking to just strategize or talk about what they need, or like needs help with their business, maybe it's a builder or a developer or flipper or whatever. We love solving problems and helping our clients, whether we're doing a loan or not, right?
Okay.
So that's really our approach. For a lot of our clients, we want to create value, and yeah, that's it. Happy to team up with you in California as well, because we like California. We like doing deals out there, and we're familiar with some of those markets, and so far it's been good to us.
Okay. Well, I've got a investor right now that's looking at a lot that's about 850,000, in Santa Barbara, the city of Santa Barbara. And when you mention on your website that it's on kind of a property by property consideration on how you're doing things in California, it seemed a little bit different than, you're just going to jump out in Florida and move right forward. Would you say your hesitation in California, it might be the regulations, or what would you say your slowdown in trying to balance whether you're going to do a deal in California or not? What would be your reservation?
I think there's a lot of variables in California. The permitting, the whole process. I mean, some of the red tape that you guys have to go through out there, which I'm familiar with, and I'm empathetic to it. But at the end of the day, we like to do deals where we can just get started, right? We're happy to guide somebody, but these sort of long drawn out pending whether you're going to get a permit or not deals. I mean, I think any lender would kind of shy away from that.
Gotcha.
So that's primarily what it is. And certain markets we just don't believe in.
Yeah, that was kind of my sense when I saw that hesitation on California. I thought, yeah, it's probably permit. We built a house on about 7 acres, and we're at about the 2,000-foot mark here in the mountains of Santa Barbara, Ocean Island views. But that happened 30 years ago, and things were bad enough back then. So I can imagine that Florida right now looks a lot better to you than dealing with California, but you will still do it depending on how difficult it gets.
Yeah. I mean, we love California. It's it's been good to us. We're looking at one right now. Actually, it's a pretty big one.
Okay. And tell me a little bit for people like myself that may want to, work with you on a referral basis. If it's a small loan, we're able to come in and kind of deal with that on a joint venture situation where I just kind of split 50-50 until we work to the next level of that. But once you get up into, the higher amounts, like the 850,000 or whatever, that's a little trickier to control and be on top of. So it would be a lot easier for some people like myself to just get the people to you, refer them to you for that loan, rather than trying to come in and control the actual purchase and sale and all that through wholesaling or outright buying or whatever. Outright buying is not a problem at the low end financially, but it certainly becomes more of a problem as you go up in the numbers. So how does the referral thing work out?
Yeah. So because we're a business purpose lender, we can pay referral fees, right? So we have a cool partner program where actually partner signs up, they get their own link or QR code, right? And so they send that link out to a client, and so they could see that client sign up. And if they sign up, of course, we're talking directly to the client, and then from there they can, the partner that sent the link to them can see the stages of the loan and at closing, and then of course we'll pay a referral fee to that partner once that client closes.
Okay.
So we'll deal directly with the client, but you can see it. You can see how many people you brought in, how many signed up, how many what the stages of the loans are. It's pretty cool.
Okay. So let's say, just to make the numbers easy, if it was a $500,000 loan and you got a referral fee for that, is that a percentage of the loan, and what percentage might that be?
Yeah. So we usually do somebody like yourself or somebody that's, agents, realtors, other brokers will do 25% of the origination fee. So, something like 800,000, that might be a 1.5 on the origination fee. So you get 25% of that.
Okay. 25% of that. Okay. Good. Yeah. Well, that certainly makes it a lot easier than trying to get in there and control a very expensive property when the chances of doing that are slim, right?
Yeah.
Thank you. I appreciate that. Yeah. Well, good. Okay. That's worth doing.
Yeah. It works well. I mean, we've signed up some tech companies as well, where they just posted the the link right on there, and they have access to a lot of investors coming in, like real estate tech related stuff, right?
Okay.
And we're just getting a flood of, borrowers coming in there. They just happen to be investors looking for deals, and these guys are just, watching that 25% tick up every single time, just, not doing anything, just post it on their website. So
that's amazing. They're probably doing a lot of good podcasts or videos or whatever, and they've got a big following, and the referrals are just icing on their cake. So that sounds like a good gig for a lot of people out there. That's great.
Yeah. Well, they appreciate it too, because the feedback is really nice. I mean, we're very responsive. I mean, we tell them, like, we're not afraid to say no. We're not afraid to say, hey, you shouldn't be doing this deal anyway. That's just our perspective. We won't lend on it, and candidly, we wouldn't buy it either. So we're not afraid to be very candid with our clients and advise them. And we're just, the loan is easy. I mean, you go through some of these other big lenders. I mean, you're gonna spend like hours try to get a deal done through a bank versus us. I mean, we need like 9 things and a quick decision, and we'll send you money within a couple of days. I mean, it's pretty simple.
Okay. So, yeah, well, I got through a loan here recently, a few years ago, when the rates were at the bottom. And at the very end of the loan, when they came over with the notary to sign the paperwork, and it took just like weeks and weeks to get to that point. At the last question, after all the papers were signed, is, hey, I noticed that the last name of the renter in this property is your last name. Is that your daughter? And I said, yeah. And they're like, nope, can't do it. That's totally illegal for us to do. We don't accept those kind of loans. Do you have situations like that?
Yeah, the business purpose, I mean, you can't use it for yourself personally, right? If it's an LLC, you can't use it for family. I mean, I've had clients where they've just put different names under it, but it's kind of a yeah. You just don't want to do that. I mean, if you're doing a business purpose loan and you personally are receiving, or your family member or whatever, it creates a little bit of a conflict. But I think it depends on the deal too.
Right.
Depends on what the plan. Like, if that sounds, was that like a DSCR loan or a rental loan?
It was just a refinance on a rental property.
Yeah.
And she happened to be a renter in our property at the time. And actually she still is until we pass away, because the trust has got her name on it, so she knows where it's going. But for as long as people understand that, then they're not wasting a whole lot of time doing something stupid and getting to the end of that and going, well, why didn't you tell me that way back at the beginning? So that's probably a good thing for people to know, so they're not wasting your time and their time.
Right. I mean, on a DSCR loan, we can get past that. I mean, it depends on how we're structuring the deal. I mean, if this was a multifamily property, right? So, I mean, something like that seems like it would be a little easier to work around. If one tenant happened to be your daughter, I mean, I wouldn't see that being a problem, especially if she's keeping an eye on the place, and it's an employee kind of situation that's staying there. That's never an issue on some of the DSCRs we've done.
Yeah, it was a single family home.
Oh, okay.
So, like I say, the main thing is that people just need to know before they spend a whole lot of time wasting their time and your time. And so sometimes I guess, you just don't know the right question to ask at the right time. And then
it's a good point.
All worked out in the end with a different lender. My guy got back with your broker and just said, Dan, we got 20 lenders. We just go someplace else, and it worked out.
Yeah. No, it's a good point. Yeah. I mean, if it's a business purpose loan, obviously you ideally, or your family, is not using it, but it's a case by case basis. I mean, we've done deals where people have said, well, it's been my personal home for a long time, but now I'm putting it into my LLC and I'm going to rehab it and I'm going to sell it. Right. So something like that, we're okay with that scenario. Right.
Okay. So what about the opposite direction? Let's say it's in their LLC. It is a commercial loan, meaning that they're not living there, they're not the owner occupant, but at some point in the future they want to be. How many years do they have to go on that loan before they can go, oh, I want to change this from my LLC and actually go occupy it and live there? Is that a possibility?
It is a possibility. I mean, usually, you have to do a new loan, right? If you're saying the LLC is, so what you're saying as an example is the LLC owns it. It's been a rental loan for a long time, right? Not like a fix and flip.
Right.
Right. So yeah, it's the LLC that owns it. They're renting it out, and you want to convert it to a personally owned and owner occupied home, right? So
Okay.
typically you would have to refinance that, especially if you want the tax benefits. That's just a better way to go either way, so, but depending on
Okay.
rates. But look, I mean, people make decisions to move in and out of personal or business all the time, so I think depends on the scenario and the timing and the lender and, how
Right.
it's structured.
Yeah. Those questions need to be asked up front. So, if they have intentions, like say it's vacant land and they start off not being an owner occupant, but eventually want to be one,
Yeah.
like you say, you'd have to change the loan and change the title possibly and all that.
Well, I think if it's an investment, like a construction loan, right, from an investment deal, right, you build it out, it's vacant land.
Mm-hmm.
From there, you're wanting to roll it into a rental property, right? You're going to,
Mm-hmm.
you could do a DSCR loan, or you can do a long-term regular mortgage, which you're going to get a better rate and better tax benefits anyway if you do the latter,
Okay.
right?
Okay.
So I think it's going to cost you less even if you have to do a new loan. But let's say if you do build it out as investment property first and you want to convert it, right? I mean, or stay in it to figure out what you want to do. I mean, that's
Right.
could be a short-term situation. I don't know. There's a lot of variables with that, right? Most of what we do is actually just the short-term loans anyway. We'll do the DSCRs, but a lot of our high velocity stuff. And so we had a client that built out a nice house. It was a beautiful house. And he just said, well, you know what? I'm just going to move into this. I decided I'm going to move into it. And, he refinanced it in his own personal name, and it was a better rate and terms anyway. So, that's the way to go mostly.
Okay. So if the majority of what you're doing on the loans are for builders that just need a short-term loan,
Mm-hmm.
Get in, get out, fix, flip, whatever, that works really well. But if somebody did want to actually change at the end and not sell it to some other end occupant,
Mm-hmm.
then they would just need to go through the other refinance, because you're really doing short-term loans. You're not doing 30-year mortgages.
Yeah, the DSCR will do. That's a securitized loan,
Okay.
right? So we will do those. But yeah, in the scenario that you mentioned, as far as building, they're going to need to refinance it either way, right? So it's better for them just to finance it as a personal regular mortgage, consumer mortgage. But we don't do any of the consumer mortgages at all. So we just business purpose loans only.
Gotcha.
DSCR, bridge, fix and flip, and ground up.
Okay. Good. It's all business.
Yep, that's right.
That
just
sounds
investors.
Great. That sounds really good, because there's a lot of people out there that need to be just investors. You know what I'm saying?
Yeah.
We're heading that direction. So the sooner people get clear on how they're going to do that, figure out a way to make some money, but continue to invest. That's a good thing.
Yeah. Where do you see most of the clients struggling out there when it comes to lending, flipping, building? Like what are the biggest challenges you're seeing out there?
Well, certainly, getting the loans and qualifying them and getting them in an easy, quick way is a challenge for a lot of people. Probably for a lot of people at this point, it's getting to be more and more just employment period. So they got the money to do anything or something, some kind of business. So getting the loans, getting a good lender, getting a good person that you can work with that kind of knows you, because after you do business with somebody for a while, you get to know them. And when you say, you'll tell them yes or no, would you say the majority of the times that you say no is because they're overextending themselves, or because it's a piece of property or an area that you just go, this doesn't make a lot of sense and we don't want to go there? What would you say?
Well, we often say no if the ratios don't work.
Okay.
One thing that we often say no on a lot is if somebody says, hey, I want to come in and I have very little cash, but I want 100% financing. I want to buy a Hyundai or a Kia versus a Mercedes, and it's just like, well, I'm sorry, that's not the type of place we are. We don't do 100%.
Right.
Anything. So we're saying no to that a lot. But,
yeah. And I'm sure there's
beyond that, it's giving them a real perspective on what they're building. I mean, so like, for example, we said, look, your GC is overcharging you on this project. Like, I wouldn't invest in this. So you need to go back to them, or, readjust something, or get a better price some other way, or build something a little bit smaller, so I think there's so many variables of how we say no.
Right.
Yeah.
Okay. You can see with the numbers kind of where people are charging and what you're used to seeing. So you're able to give them some good advice that you're heading down a road that doesn't make financial sense.
Right.
And they can't jump in there and say, well, I'm going to act as a GC because this is not an owner occupied property.
Yeah.
I was able to do that, which, knocked about $100,000 off my construction for the home. But if you're not an owner occupant, you just can't jump in there as a GC.
That's right. Depending on how much of a significant rehab you're talking about, or full construction, right? So
right.
One thing I want to add, one thing really cool that we do that most lenders won't do, which makes a big difference in the rate and terms. Let's say if we have an investor or borrower that has a little bit of capital, or they have equity in a project, they want to buy this property, but they don't have the experience. So a lot of these lenders will look at the experience in the past 3 years. How many deals have they done? That classifies the tier borrower they are, and that gives them the different rate and terms, leverage, et cetera, right?
Okay.
What we'll do is we'll blend the GC experience with the borrower, right? So now that borrower is looking like a top tier borrower. As long as the GC is still building the deal, or doing the rehab on the project, or building, right? We'll just make the GC sign a completion agreement, not a personal guarantee, but a completion agreement. And so that works especially well out there in parts where you've got an owner that hasn't really done investment. They've got a nice property, they've got the liquidity, they've got equity in it, but they just can't get a loan because they don't have that investor experience, right?
Gotcha.
And so, it's a huge benefit we've seen, and we're quoting rates, like in some cases 30% less than what they're getting quoted out there, because
that's good.
We create them a higher tier borrower.
Okay.
Right? So we're doing like 8.5, 9.5. I mean, even on our hard money stuff that closes in 2 days. I mean, most hard money lenders are 12 plus, 10 plus. So nobody's really beating us on that. And in that scenario I just mentioned, if we're able to blend the experience together, it just gets them the best scenario for rate and terms. So
gotcha.
Yeah.
Well, I guess if you're a person out there looking to get referrals, then you certainly want to be working with people that are experienced fix and flippers and are doing this. So the chances of you giving them a loan is a lot greater than somebody that just says, hey, I found some vacant land and I want to build $1 million house on it, and I'm just starting.
Yeah.
It's like, I guess if you have people on a website, you've got just a ton of people coming through, then they're not too worried about weeding them out because they're not spending time doing that. You just get the referral, and then you decide whether you're going to work with them or not.
That's right.
Okay.
Yeah, but sometimes if people are doing like just a couple flips or like, a year,
Mm-hmm.
but the GC's done a lot more, right? Now all of a sudden
Right.
they get a better rate in terms because we blend it, right?
Gotcha.
So now
Gotcha.
they're a higher tier, better tier borrower.
Okay.
But that's also like, for example, there's some projects that we looked at where, there was catastrophe, there was fires, there was other things, right? And now you've got just an empty lot and there's so much equity in that property, but that individual wants to now turn it into an investment and get a builder to build it, but they don't have a track record of investing, but they just own this personally, but they want to roll it into an investment. Well, it's very difficult for them to get that ground up construction loan. But if they have a GC with the experience, now all of a sudden, boom, you take this lot with 2 or 3 million in equity and you could do a ground, $5-6 million house, and they're getting best tier, rates and terms. So that's where it especially works well.
Interesting. Pacific Palisades, huh?
Yeah, that's a good example.
Okay. Okay, good.
Yep.
Yeah. Yeah. Well, I want, for myself to be able to see where this is going, but I also want for the people that work through the Santa Barbara Real Estate Investor Association to get a good, clear picture of what they need to be looking for as they head down this path. So it's good. You're doing some good stuff.
Yeah, thank you.
I like it.
Yeah.
Jeez. Okay. Well, one of the things that I will need to do after we're through here is get back with you just to get, signed up on that referral program. And I guess we can probably do that via email or whatever.
Yeah, I sent that to you via email. You probably have it in your email.
Right.
Once you sign up and click through, then you'll have your partner link
Okay.
that's on there.
Okay.
And then you can just send that link out or the QR code, however you want to do it.
Gotcha. Okay. Good. I'll go
Yep.
back and make that happen, and we'll get that going. I think, I'm getting to the end of my questions here. Like I mentioned in the past, Santa Barbara is a real small venue as far as anybody trying to do anything. And years past, when there was like meetings that were 200-300 people showing up, they weren't doing that in Santa Barbara, no matter who was, spending 5,000 just trying to get them to get here. So it really helps to have this recording and your information without trying to bring a bunch of people, and then drive you crazy about where am I going and how is this actually going to work. So I appreciate your time today doing what you're doing, and it sounds really good.
Yeah, absolutely. I appreciate you sticking with this REIA for so long. I mean, you've offered a lot of support for a lot of people, and I'm sure they're very grateful for that.
Yeah, I was surprised. We worked with an accountant out of Las Vegas, and then they did reviews of different REIAs nationwide, and they said, the Santa Barbara Real Estate Investors Association is one of the few REIAs that isn't charging people to be a member, and all their meetings are basically free, have been in the past. I think I'm to the point now just to get people to not say they're going to show up and actually show up, is say, hey, look, you paid $25. We're going to have it at a place where they serve lunch, and we're going to buy you lunch with your money. So you need to show up or you're going to lose your $25, whatever it takes. But it was a nice article they did. And one of the things that we have done for years is video, capture the video of everything that happens in our meetings, whether the meetings are an hour or 6 hours. And we've had quite a few speakers show up at some nice places for 6 hours of speaking, and it all goes up on YouTube, and it's all free access. So that's been, it's been a good service for quite a few years now to be able to provide to people and enjoy doing that.
Yeah, that's cool.
Yeah.
Yeah, that's a beautiful thing, man.
Well, I appreciate it, and I
I'm
appreciate.
sure it's grown over the years, and I know a lot of people become more remote now. They like to watch the videos versus show up.
Exactly. Yeah,
Yeah.
exactly. And that really, is probably the best thing that came out of COVID. You know, if it wasn't for COVID and telling people go home and don't come to work and do everything from home, a lot of technology advanced because of that. And that's not a good reason to have COVID or have people have to go through all that. But certainly that was probably, in my mind, technically speaking, the best outcome was getting people comfortable to do what you and I are doing and comfortable to go look for that and get that information. And of course, having AI there to say, well, is this fact or fiction? Are these people for real? Is this a good company or a bad company?
Mhm.
And, and I've got like 6 websites, and I say right on there, you need to ask AI. And I don't care which one you ask. Here's 4 or 5 links. Go jump on them. Ask them everything you can possibly ask them before you ask me or anybody else. Why spend the money? Because there's more information off of AI that, if you ask a couple different AIs, you'll get the truth one way or another. So it's really been not only COVID that helped start that, but AI and the direction we're going with all this. It's making everybody's life much easier to be able to just do business.
Sure. Yep. Yep. We're past the information age, right? Now it's the execution.
The execution, get out
I
there.
think people really still need help on the execution side and guidance and
Yeah.
mentorship and things like that. And
Yeah,
so,
they really do. And there's nothing like talking to a human being that's really got the experience. And I appreciate your experience.
yeah,
As I can tell, you got it. You're doing a good job.
thank you. I appreciate that. Likewise.
Thank you. Okay, well, unless there's anything else that you want to cover, I'm good. And
Yeah, no, I think we're good. I mean, one thing I offer up to, any clients that are kind of doing loans, I'm happy just to talk guidance about a property, whether we do a loan or not, right? I mean, I really that's kind of our approach. It's like, hey, you want to get a, 30 minutes of consultation, or, need me to mentor you on your operation, or, things like that. I'm happy to jump in, and especially the guys doing high volume of flips or a lot of ground up. We can jump in and look at their operation, look at their costs, look at their, sort of their processes, and like really add a tremendous amount of value to their business. So we're happy to do that at no cost, just as a consultation. So, something we love to do. And
well, it's building relationships. And how else are you going to do it unless you give some people some time?
Yeah, that's right.
You're going to find out real quick, real easy. My motto is, opinions are like awesome. And when I say that in a meeting, a REIA meeting, they all look at me like, no, Dan, I don't think you've heard that correctly. And really, when you get a chance to listen to people talk and what they have to say, then you get a chance to know them and understand, do you want to move closer, or do you want to get out of town and away from them as quick as possible? And so, that's what we need, some time with you. That's all. So I will definitely get the video out there. People will get a sense that, hey, this is, Daniel, somebody that I can spend some time with and get some questions answered and see if we can't get this loan going. So thank you.
Yep. Thank you. I appreciate your time, Dan. And once I get out there, I got a friend out there in Napa. He's a wine farmer. So I get out and see him once in a while. So I might have to come say hi once I go visit him.
Santa Barbara is always a great place to go to. I'll tell you, it's not Lodi. It's a good place to stop off, and a lot of places to go. We've had meetings out at the Santa Barbara Hilton Resort, which now used to be the Fess Parker Resort. And so, those are places that have good meetings when we do it there, and great places to stay. And, you're right across from the beach. So love to see you.
Yeah, absolutely.
Anytime.
Okay. I appreciate your time.
Okay. Thank you, Daniel. You have a good one, and really good stuff. I really appreciate you doing this.
Yeah. Thank you. All right.
Okay.
Be well. All right.
Take care.
All right. Goodbye.